I recently bought another $3 million worth of life insurance, and I wanted to break down a video of one of the tax benefits that's going to come with buying this policy, especially with my corporation owning the policy. And I wanted to kind of break down on one slide what this is going to do for me, financially speaking. So I have my corporation and I have the $3 million life insurance policy. So my corporation is the owner and my corporation is also going to be the beneficiary. So that means when I pass away, $3 million is going to get paid tax-free to the corporation, which is great. But I think the more important thing, or at least something to consider, that when a corporation owns a life insurance policy and the corporation is the beneficiary, the corporation itself will receive a credit to its capital dividend account. And basically, if there's a credit to a capital dividend account, that's going to allow tax-free capital dividends to get paid out of the corporation. So in other words, whatever that credit is to the capital dividend account, that amount of corporate assets can come out tax-free. So you're going to be able to, with the right strategy, at least save quite a bit of money. So when I pass away, $3 million gets paid tax-free to the corporation. My corporation will also receive very close to the death benefit, if not equal to the death benefit, a $3 million credit to the CDA. So this means one of two things. One, if my family needs the entire $3 million out of the corporation, they can do so. They can pay the full $3 million as a tax-free capital dividend. So you're able to really have a corporation pay for a life insurance policy. The money gets paid to the corp tax-free, and then it can flow out of the corporation completely tax-free. Now, assuming a 50% tax bracket, that would traditionally save you about $1.5 million in taxes, because if you try to pull out $3 million out of the corporation and you do not have this credit, you're going to get hit. It's going to be fully taxable, probably at the 53% tax bracket, but just for easy numbers, it's about 50% savings. Now, I think the other planning opportunity that a lot of business owners don't see or they miss is sometimes families don't need the full $3 million out of the corporation. They either, they might need some of it out, but they can retain some or a significant amount of that in the corp. And if you can retain some of that life insurance payout, you may have other family members or future generations where you can keep the life insurance proceeds in that corporation or holding company. And now you can pay them a salary or dividends for quite a long time. But the thing is, you may have additional retained earnings you want to take out of the corporation on a tax-free basis. So maybe let's just say I kept the full $3 million in the corporation for the life insurance, but I had another additional $3 million worth of retained earnings or a property, a real estate property, or some sort of corporate asset. I could take that out of the CDA instead. So I think as a business owner or someone with a holding company, you want to have options, especially when it comes to estate planning. And having a corporately owned life insurance policy obviously protects the family, protects the company, but it also gives you options from a tax planning perspective on what do you now want to pull out of the corporation tax-free, and do you have additional assets that you may want to utilize through the capital dividend account credit you'll receive from a corporately owned life insurance policy.